Hello everyone. Today we are getting into an exciting analysis of three stocks that have caught the attention of investors. Whether you are a seasoned trader or just starting out, understanding these stocks can provide valuable insights into market dynamics and help you make informed decisions. We'll start by looking at the fundamentals of each company, exploring their growth potential, financial health, and market position. We'll also touch on the technical aspects where applicable to give you a well-rounded perspective. These stocks have been selected based on a combination of strong fundamentals, undervaluation, and potential for future growth. So let's explore what makes these companies stand out and why they might be worth considering for your portfolio. And the final one is whatever the stocks I'm discussing over here, it's just for education purpose and not for any recommendation or any kind of a buy sell kind of recommendations, because I'm not a SEBI registered advisor. Without further ado, let's get into the details. This is Sundar and you are watching Mindful Finance. Yeah, so let's get into the details. I'm not a guy that going through all the content and then revealing the stocks. You would have seen all of my videos. I reveal my stock name upfront. There is nothing to create a surprise or something like that. So let's get into that. The first stock which I'm going to talk about is NESCO Ltd. It's a diversified business powerhouse. Why it's a diversified powerhouse? It has a very good story and it's a part of our India's growth. So this company has started with manufacturing kind of area, but slowly it has developed. It put a foothold in real estate kind of stuff, and right now they are very well positioned in a couple of different diverse sectors like IT parks. The one which is a very famous one is a Bombay Exhibition Center. Even the hospitality services gives a good amount of revenues for them. They have shown a consistent growth in their profits and their revenues. The first thing let's talk about IT park division. They started doing in 2013. Their first IT hub was created and it started with a revenue of 28 crore, and later it has grown like anything and it become currently, like you can see, 293 crores it is bringing as a revenue. Tower 3 and Tower 4 are the currently like in a working condition or it's completed one that has a occupancy ratio of 82 to 97%, which is a very good occupancy ratio. Because when you construct a building or infrastructure for renting out for a big IT giant, you need to have full occupancy. If anything is empty, then that is not going to bring any value or any revenue. So how much utilization you are going to have with your resources is very important. So that way, the way they are managing and controlling is phenomena, and it is growing. And currently they are planning for the Tower 2, and which is going to be like 4.6 million square feet, and this is designed by a very renowned architects from Singapore, and this is going to be estimated as a 2000 crores, but this is going to bring a very good revenue from their business. The second one which I mentioned earlier also, it's hospitality services that is catering to their good amount of revenues. They provide catering services for the IT hub, means the employees working on the floor, on the premises, and also they have a Bombay, as I mentioned earlier, the center called BEC. They call it a BEC, which is Bombay Exhibition Center, which is a very famous one, and it is one of the biggest one in India. So there, whatever the exhibition happening, so these guys take care of hospitality, catering services and everything. So that brings a very good amount of chunk of money for them. And it is because since there's an expectation of since there is expectation of the Tower 2, which is going to bring more people and more volume in their business with respect to hospitality services. The third one is they merged with a company called Indabratar. I hope I'm pronouncing properly. Indabratar. They are very famous in engineering products and services. Basically, this company NESCO started as an engineering company, but they evolved into hospitality and realtor kind of direction. But this is the core thing. So they have a very diverse portfolio covering from different things in the engineering sector, which is like high value industries that service or like blast cleaning system, which means there will be like oil, greases, all those kind of things will be there. So that can be cleaned very easily. So basically this is for high-end industries where they need to clean the parts, and these guys are covering those kind of aspects. And if you see the financial performance, so their growth from 25 crores to, as I mentioned earlier also, like they are growing like anything. and this specific industry alone is giving a 25 crore revenues, and recently it has increased to 47 crores. And one more interesting thing is they are into abrasives and machine sales, which means like any product is manufactured, so that has to be polished and cleaned properly, right? So these guys support in that area, which is very niche area, and they are exporting the services to different countries as well. And also they plan to have investment of 4 crores for this financial year to improve their output. Just to talk about this particular company, this was started by a visionary named Sumant Jetabai Patel. He left this legacy, he is no more, but he started this company during the year of 1958, and he was the key person to bring the Bombay Exhibition Center. Successfully he has implemented, and it has created a very good benchmark in how an exhibition center is supposed to be, which is currently the world India's #1 exhibition center. And he is the founding father, as I mentioned, and he is the pioneer in making this exhibition kind of industries, like bringing all the industries together and conducting in one place. And he pioneered that in India. And his effort is not wasted. His effort, his legendary is given to the next generation. Now the management also is very good. They are carrying his vision, and vision is being taken care, and the research is also evolving with the time. So as I mentioned, their future plans, to summarize that, their future plans are including the IT park extension, which is they're building this second tower, and they are enhancing the BEC to have more occupancy, the more exhibitions to be conducted, and the more area and more hospitality. And they are upgrading their interpreter engineering services. So these are the key areas. But thinking about all the positive, we discussed all the positive, but just to check about the negative part or the challenges, they have market competition. As I mentioned, they are the India's first or the largest exhibition center holder. But recently Jio has started their convention center in Mumbai. So that could be a competition for them. But again, so these competitions are good for any business, so that they'll start to innovate and bring more ideas. And as I mentioned, and these challenges are giving more opportunities for them to expand their services. And technology advancement, again, since they are building this kind of big centers or big IT hubs, they have to be innovative. The buildings, everything has to be smart. So they are working towards those kind of area. And the last thing is about sustainability. As usual, I keep on telling that sustainability is a very important aspect. If any company is not focusing on sustainability, will fail in the long run. So everybody has to adapt the sustainability process as early as possible. And this particular industry is very important to follow sustainability process. And also they are following it. So that is a very important thing. Even though that's a challenge, but that is important for them to be innovative and bring more audience to them. Now let's check the fundamentals of these companies. This is having a market cap of 6,000 crore around, and the PE is 17.9. So why we are checking PE? See, both EPS, PE, something, it will be derived based on the same thing. Okay, if you divide 904 by 17.9, you'll get 50.6. The PE is basically price per earning. How much price you are paying for earning 100 rupees? That is 17.9. So to get the company to make 100 rupees, you are paying 17.9. Okay, which means for example, you bought a house for a very cheap house, and you are able to get a revenue of 100 rupees from that. That's the point. 17.9. If you're getting a house for 70 rupees, and if you're renting for 100 rupees, your profit is only 30 rupees. Here, by 17 rupees, you are earning almost 83 rupees. So that is the concept of PE in a very simple language. I have made a very in-depth video about what is PE and how to analyze PE, and how the PE can be used for even buying a home. So please look at the video. So basically the PE is very good. See, sometimes this PE, every industry has their own strength and weakness. Okay, and industry might be same, but the companies may have a different way of doing things. So even though if you are comparing a PE with the industry PE, I feel like we have to handle the PE within that company itself. So for example, if you check the PE ratio here, okay, go for a max, okay, and you will see a dotted line over here. Okay, if you uncheck, you won't see. If I check, you can see this. So this is the median PE. Median PE is 17.9. For this company, always PE's average is something like 7. Median is different, but we can think as an average, which is 17.9. So 17.9 is the median PE. Okay, and it is at the median PE only. So that means company valuation is very good. So it's undervalued or fairly valued, you can say. And if you check the previous video, I told you how to pick a simple way to find a company growth. So if you haven't watched the video, please watch that video. You can understand easily. You see the profit. We want a company to earn profit. Is it giving profit? And what is the operating profit margin, which is 63? Just imagine. Okay. And year on year, if you see, sales is increasing, expenses also increasing because they might be doing researches and all those things, but operating profit increasing, margin is also good. They are maintaining a proper average operating profit. So company sheet is look, and the important thing is about shareholding pattern. And yeah, so promoter holding is not reduced, it is consistent. FII has increased. It's a very good news. And DIS has reduced. But FII is more. So that is a good sign, right? And public is having 23.7. So that way it is very good. Now let's see the chart. If we see the NESCO chart here, okay, it was consolidating for very long time, and currently, let's go to a longer timeline. It is in the verge of testing its all-time high, which was made very long time, which is February 20. Okay, it tested that line, and it is touching, and now it's in a very good position, and it is following the channel. So this has a very good potential to, let's see the swing low. In the short term, if you see, in the short term, if I look at this chart, 1053 is the target for now. Okay, this is just a current. If the pattern continues like this, then we have a potential to reach this pattern, this angle trend line, which is around 1055. Let's see. The second company we are going to discuss on is Fineotex Chemical Ltd. This is a specialty chemical company, and they are diversified within the chemical sectors, which is they are into textile, they are into manufacturing of paints. They are into manufacturing of chemicals for like big industries like floor cleaner, tile cleaner, all those kind of chemicals. So they are into diversified zone, but most of the things are related to textile. They have acquired a company named Biotex in Malaysia, and they are supporting in R&D. And basically, what the textile chemical segment is about is, see, when you're manufacturing or cloth or any kind of a thing, it goes through certain process like preparation before the pre-processing, we say, okay, before starting the process, pre-processing, during the process, dyeing process, after that, drying it. So all this process involves certain kind of chemicals. So where these guys come into the picture. And next, as I mentioned, they are into manufacturing of chemicals like a floor cleaner, toilet cleaner, tile cleaner. And these cleanings are for many hospitality things, hospitals, industries, all those sectors can be utilized. Right? They are having almost like 470 product category for the textile part. They make a fluid, water and oil based fluid, which is helpful for a drilling process, and home care products like soap, detergents, all those sanitizer, and all those kind of things. They are also present globally, almost 70 plus countries they are catering, and their dealer networks are 110 plus dealers in Indian and international markets, and the revenue split is 77% in domestic and 23% in other countries. So which is a very good diverse portfolio. And manufacturing facilities, as I mentioned, it is in a different area. The main is in Malaysia, they recently acquired, where the R&D happens. And the total capacity is around like 104,000 million tons per annum, the manufacturing capacity they have. And the Biotex Malaysia acquisition, they are very helpful in expanding their business. R&D is mainly in the textile business, and they themselves having a product range of like 50 plus categories. And their innovations are, one of the recent innovations are like mosquito life cycle controller. They're making a eco-friendly. So this is very interesting thing, which is the chemical which are used are to reduce the life cycle of the mosquitoes. That is before it get adult, or which the mosquito can carry the diseases. Before that, those mosquitoes are killed. And this is a eco-friendly solution which they are producing. And the strategic partners are Eurodyne CTC in Belgium. So this Eurodyne CTC Belgium is where they do R&D towards the process which I mentioned, right? They call it the auxiliary for textile business. The chemicals used during the different process for the textile industry. So that is where this Eurodyne Belgium is about. And HealthGuard Australia, which I mentioned about the chemicals which they make for tiles, floors, and everything, right? So they're having a tie-up with Australia, where they're focusing more on the hospitality segment and hospitals. And Sasmira Institute, which is the R&D center mainly for textile. And the key clienteles are Welspun, Raymond and Pidilite. So they have very good customer base. And let's check the fundamentals. So this is a 4,000 crore market cap and the price is at 388. Stock P is 35. Let's see how the stock P is within this company. It's a little bit higher, okay, compared to the median P. Median P is 19.4 and it is at. So we have to check this out, okay. Just make sure whether you are buying a good company with a cheaper price, valuation price, right? You need to check the valuation part. If you see the debt part, almost debt free. See the previous company which we checked, that is also debt free. A company which are into a lot of infrastructure but still they are debt free, that is very important thing to note, because where the intensive infra is required and there is no debt, that is a very good sign, first of all. And let's see the sales and margin. See, sales is increasing, the margin is increasing, operating profit margin. It's a good sign. Let's go and see the reports. See the sales. Sales is growing consistently and the profit is growing consistently. And the operating margin is growing, right? If I see year on year, let's go to the balance sheet here. Okay, profit and loss. Operating profit is increasing. The margin also is increasing. So it's very good, right? And let's see the shareholders pattern. FIIs, see the FIIs holding, guys, how much they have increased, and DIIs they have reduced. And look at the promoters, they have reduced a little bit, but it's okay. This is within a limit. And let's check the chart. So let's see, this was growing rapidly. If you see the growth, this was for a very long time, this was in a sideways. It was accumulating for a very long time. And now after December 2020, look at it, how it went. It is growing rapidly. So it is showing very good strength in the chart also. And it fell a lot earlier. This might be during the war, April 23, yeah, around. So it fell like, not during the war, it's during the war. So it fell almost 50% and it recovered completely. And it is growing consistently. You can see the potential. Now it is nicely at the support level. Okay, if I draw the trend line, if you can see, it is trying to break the support, which earlier it broke, right? The support was broken earlier and it is testing and trying to break the support. And if it breaks, there's a good chance it may go till 600 rupees. So I think the video has gone a long time. So I thought of sharing one more stock. Maybe I'll do it in the next part. I'll create another part for this one. So there I'll discuss in the third stock. But hope you understood how I was exploring the stocks and how I'm defining it and how I am tracking it. The basic reason why I picked these two stocks are, you would have heard about the news about textile industry is going to be the next growth sector in our India, because very long time textile was ignored and right now it is picking up and the people are focusing on the textile industries. And the second is about infrastructure, which is another thing, the hospitality sector, which is another thing to be focused. So since these two sectors are going to be the next future growth, I just thought of checking these two videos or checking these two stocks for you guys after filtering out multiple companies. So I found out these two stocks. So please do a clear analysis from your end and invest on it. Hope you like this video. If you like it, please do subscribe and share it with your friends and colleagues. And please leave a comment if anything I'm wrong or if you have any point of opinion, do share it in your comments. Thank you.